Welcome back, friends. In today's session, we are going to detail about section 32, depreciation in admissible deductions. This is the second video of part 2 of PGBP. Now, this course is mainly meant for intermediate courses of CA, CMA, CS for the income tax assessment year 25-26 or the previous year 24-25. Okay. This is relevant for the exams May, September 25. Now let us go straight into the details of section 32, depreciation. Depreciation is mandatory. You cannot say I will not claim depreciation this year and whenever I feel like claiming I will claim it. It is, because if you're doing like that, the problem is that your double DV, written down value, will be different for different people. That is also there. For example, this year, in this previous year, your income or profit is only 1 lakh. Okay, so up to 7 lakhs with the various savings and all, you are not liable to pay tax. That if you claim depreciation or not, your profit is below the taxable limit. So you are thinking that okay, this year I am not going to claim depreciation. Then after next year or maybe in the year where my profit is high, I can get some deduction through depreciation. So that way you are misusing the provision of depreciation. So even, okay, you have the freedom to claim or not claim the depreciation, but your double DV to be deducted each year. Even if you are claiming your depreciation after 2 years, this then what will happen for the previous 2 years depreciation also to be deducted from the cost of the asset, then double DV will be calculated. On that double DV only you can calculate the depreciation. You cannot calculate depreciation on the cost of the asset. Okay, this year you purchase some asset and you are not claiming depreciation this year, next year also you are not claiming, and the third year you are going to claim it. That means actually in the third year you cannot consider your double DV as the cost of asset because you are not claiming depreciation. Okay, double DV or written down value is actually the cost of your asset minus the depreciation claimed. So even when you are not claimed depreciation, whenever you are claiming depreciation, you have to deduct the depreciation for the previous years also. Then you have to arrive at the double DV on which you have to calculate depreciation. So actually it is mandatory to calculate double DV based on your depreciation. Okay. Now depreciation is chargeable on assets. Asset can be tangible asset. You know what is a tangible asset. In lower class you have learned what is a tangible asset. Okay, which can be touched or seen, whatever. Okay, that is a tangible assets. And intangible assets actually, you know that how patent, copyright, trademark, all these kind of things are intangible assets. So Income Tax Act has defined what are the tangible assets and intangible assets on which depreciation can be claimed, allowed, depreciation allowed. Okay, depreciation elements are given only on these items: tangible assets, buildings. Okay, first class. There's different classes are there. The class 1 buildings to furniture and fittings, and plant and machinery and ships, and part B. This is actually intangible assets will come. Okay, when you say furnitures and fittings mean electrical fittings, electrical fittings does not include. Fitting does not include the electrical equipment, fan, other things, and all fan, motor, and that will not come under fitting. Fittings means that the electrical fittings in the wiring and other things will come. In the switches and wiring only will come in the fittings. Okay. So furniture and fittings, then buildings. Okay, buildings can be different classifications are there that we will come to all these things. What are the things? Now you can claim depreciation on buildings, furniture and fittings, plant and machinery, and ships. Ships include some other things also. Okay, ships. Okay, for tangible assets and intangible assets, these are the things. Know-how, patent and all. But know-how, patent, corporate trademarks and all. But actually, goodwill is not included in that. Goodwill is excluded from this. Okay. So goodwill is not considered here, but it was for up to 2019 it was there, but from 1/4/2020 goodwill is removed from the list. Now depreciation can be, the double DV method and SLM method. In for depreciation calculation of income tax, SLM method is allowed only to power sector undertakings. Okay, they have the freedom to choose SLM method or double DV method, but all other businesses should choose double DV method only. Okay, so when you calculate, opt for SLM method, the power sector undertaking, they have the accounts actually will be on individual asset basis. But here, double DV method, it should be block of asset. What's the block of asset? Block of asset means actually same class, same rate of depreciation. Same class, same rate for building. For example, building class you are taking. Under the, maybe there may be 10%, 5%, like that it may be there. Okay. So in that case, you have to consider based upon this, all 10% buildings will consider as a block, like that it will go. Okay, like that P&M also. P&M now also will be different blocks will be there. That you will learn all these things in the coming portions. Okay. So for claiming depreciation, one shall be the owner of the asset. Then only he can claim depreciation. Something is not his own, or he is not the owner of the asset, how can he claim the depreciation? It's not possible. So he shall be the owner wholly or partly. He can be partial owner also, or fully he can own the asset. Okay, and that should be used in his business or profession in the previous year. Okay, he is the owner, but he is not using it for business profession or profession. He is using it for his personal use. Then he cannot claim depreciation on that. Okay. For example, a generator is bought by a person in the name of the business. For the business he purchased a generator, but he used the generator in his home for his personal use. Or a motor is purchased and is used for his personal use. These are not, and for this such a depreciation cannot be allowed. Okay. Now, it can be, as I said, it can be a partial ownership also. And some asset of 1 crore, X and Y Limited, X Limited and Y Limited jointly bought that asset in the ratio 60-40. If the depreciation block is 15%, then actually that only 60% of the depreciation, means 1 crore into 15% depreciation is there. You have to multiply it with that. You will get the depreciation and the double DV is actually, okay, if you are considering as 1 crore, then you have to multiply with 15% and only 60% X Limited will get depreciation and the balance will go to Y Limited. Okay. Now, depreciation to be claimed, it should belong to the eligible class of assets. Eligible class, what are the eligible class? We told there are 4 classes actually, that buildings, Then we told in the beginning, so that's what we discussed. These are the eligible classes. What are the eligible classes? Okay, eligible classes actually furniture and fittings. Okay, then buildings, then P&M, and then intangible assets, then ships. All these things are these items are all the eligible class of assets. No other class will get depreciation. Only these classes will get the depreciation. Okay. Tangible assets, already we have discussed the things. Okay. Now there is from previous year 1920 onwards, goodwill is not considered as a tangible asset. Before that, it was considered tangible asset. Then from previous year 2021 onwards, it is removed with effect from 2021. Now, if you have a double DV, then the format for calculating double DV is actually opening double DV is there. Okay, then you have to add the cost of the asset that you have acquired during the PY. If you bought new asset, you can add the item to that. Then actually some sales you have done, some of the asset is sold, you can remove it. You have to deduct it from that. Okay, so you can the double DV, and if some goodwill is also there, because actually I told you from 2021 onwards goodwill is not there. If that is the case actually, then if goodwill is also included in the block, that can be removed from that. Okay, then you can find out the double DV, then depreciation can be calculated as per the percentage. Then you can find out the closing double DV for the particular year. Like that you can do. So no other capital asset is eligible for deduction under section 32 PGBP business income. Only those capital asset what we discussed, only those class are only eligible for PGBP depreciation deduction. Now when we talked about building, that does not include the land. Okay, that land is to be, the value of land is to be deducted from that. Land is actually not depreciable, it is appreciable. Therefore, on land we will not get in depreciation. Then, as per section 43.3, plant includes ships, books, vehicles, scientific apparatus, surgical equipment, used for the purpose of business profession. A lot of things are included, but actually it does not include tea bushes, livestock, buildings, furniture, fittings. Okay. Fittings actually, this is not electrical, it's water and other things only. Other fittings. Yeah, that's it. Electrical water. This will not come under plant and machinery. Plant and machinery different. All these things will come. This furniture we have a separate class is there. Okay, furniture and fittings. It will come under that. Fittings also will come under furniture and fittings. Okay, so this will not come under that. Then animal, human body, stock in trade. Stock in trade is an inventory. For that also, it is not considered as plant. What we are saying is what the definition of plant. Okay, plant does not include buildings, furniture, fittings and all. But plant includes all goods and chattels. Okay, all goods and chattels. So, chattel, what does the chattel mean? Possessions, properties and belongings. All tangible assets. Okay, other than freehold land. This it can come under that. Plant. Fixed or movable, used in business. So all tangible assets used in business can be plant. It can be a part of a plant or machinery also. Okay, but does not include animal, human body, stock in trade. Animal, if you're saying that animal, the question can come actually with, animal is an asset or not. Animal is an asset, no doubt, because if you're using in milk industry, animal is an asset. From that actually they're getting the milk and it is being sold. Okay, but actually animal, when animal is bought, the cost of the animal is there, actual cost. Then actually you cannot depreciate an animal, right? It is not possible. So depreciation is not possible. So what we will do, when it is dead, there will be price on the carcass, means on the dead body of the animal or the carcass, there will be a price, and you will deduct that price from that. Whatever you are getting will be written off from your book of accounts. Okay. So there are buildings are there, the theatre building, hospital building. The hospital buildings are, they have number of equipment in that, but even then it cannot be considered as a plant. All this building, theatre building, hospital building, hotel building, everything is considered as used in business are considered as buildings only, not as plants. Then buildings include roads, bridges, culverts, tube wells, etc. Okay. Now we'll consider one or two examples. For getting depreciation, it should be actually used in the business. When used in business it should be put to use in business. What is put to use? Okay, you have purchased some asset, but you are not using in business, you have not tested it, then you have not installed it, then you are just trial run conducted. But in that case, it is you will not get a depreciation on that. You have to use actively. You have to use it in the business, not actively. Passively also you can use. You have to use in the business. Why I am saying passively? For example, you take the case of fire extinguisher. Fire extinguisher, you have used for business does not mean actually it should be used actively, because only when there is a fire, the fire extinguisher can be used. No, otherwise it cannot be used. So such cases, it can be passively also can be used. And spare parts are there, spare parts of the asset. Okay, that can be capitalized also, because actually you cannot actively use unless otherwise there is a issue for the machine, there is a fault for the machine, there is repair for the machine, you cannot use it. Okay. So you can consider a case in the previous 24-25, some asset purchased. Okay. On 10-10-24 you purchased it, then installed on 12-12, then trial run conducted 2-1, then put to use, actively used in the business on 4-4, then only depreciation is allowed. For an asset to get depreciation, it should be put to use in the business. Then only it will get it. Okay, now you have done the trial run you conducted, but it failed. Then trial run successful means it is ready for use. But due to some reasons, you are not okay. Now actually trial run conducted. Now there is a power failure for 1 month. There is a power failure. Maybe some cable failed, or maybe COVID came. Okay, so you are ready to use, but not used due to forced idleness. So even then depreciation is allowed in that case. Why? Because it is ready for use. Your trial run conducted, everything is done. You installed it. Then actually it is ready for use. Okay, you put it on the foundation, you get installed, the trial run conducted, it is successful, it is ready for use. Therefore depreciation is allowed in the PY. Now we told there are different class and different blocks are there. What do you mean by these things? I will just explain this thing to you. Means actually there are first class, one class you have taken building class. Okay, the tangible asset part, tangible asset, you have taken the class buildings. Class building, actually there are different blocks, block 1, block 2, block 3, block 4 as given. So in block 1, it is actually residential buildings other than hotels, boarding, or all other things you remove, only residential building you remove. Residential building, this is a residential building block. Residential building block, the depreciation only 5%. Okay. Then for non-residential building, can be a garden, shop, office, factory, whatever, hotels and all other things you put together, actually it is 10%. Depreciation is 10%. Because in factory and all that more severe condition, the building is there. Okay, not like residential building and all. It is in residential buildings and all. It is well maintained and all. Or factory and all that may not be there. Therefore, life will come down. Life may come down. That may be the reason. Whenever actually the life is short, actually the depreciation is more. Okay. Now, block 3, water supply project building for plant and machinery, acquired on or after 1/9/2002, it is 40%. Then temporary structures, the life is very, very short. Okay, temporary structures, you may be a thatched shed, or maybe you used some temporary, maybe cement walls and all, you used cement boards, you are used to build some structure. Okay, in such cases and all, you will get 40% depreciation. This is what it is actually. Now, okay, anyway, you come up to this, then we can check the others also. Now, furniture and fittings, the second class we are taking, furniture fitting. Furniture fittings, there is actually, then furniture includes electrical fittings also, wiring, switches, sockets and all, it will come there. 10% is allowed depreciation. Now, plant and machinery. Plant and machinery, there can be general plant and machinery. If nothing is mentioned, only plant and machinery, you have to take the general plant and machinery. That is actually 15% is the general plant and machinery you have to take. Okay, general plant and machinery, general rate you have to take. Okay, note in other blocks. Okay, maybe some motorcycle, fan, oil well. Okay, whatever, it is 15%. Then books for lending libraries are 40% are there. Okay, in libraries, books for professional use 40%. Then now that includes maybe some computer, including computer software, means that operating system, Windows, for example, Windows or is the okay in with actually computer with OS, then in that case is 40%. You will get depreciation for computer. The windmills and all, you will get 15%. Okay, now renewable energy, you will get 40% depreciation. Then energy saving devices 40%. Then glass, plastic containers for refilling 40%. Then the plant and machinery for water supply projects acquired on or after 1/9/2002, 40% reduction you will get. Then life saving medical equipment 40%. Semiconductor industry, the plant and machinery used for semiconductor industry for chips and other things, okay, ICs and all, for that for the manufacture of semiconductor, we get a depreciation of 30%. Aeroplane and aero engine 40%. Then mold used in rubber and plastic goods and factories 30%. Then again motor cars. Motor cars other than used in business or running them on hire, acquired and put to use between 23/8/19 and 31/3/20 will give 30%. Okay, motor cars other than used in business of running them on hire, acquired and put to use 1/4/90. After 1/4/90, it is only 15%. Okay, between 23/8/19 and 31/3/20, it is 30%. We are not motor cars other than used in business of running them in hire. Mean for renting purpose, renting car hiring. If you are hiring, you are using it is more. If you are using business between 23/8/19 and 31/3/20, it is 30%. And after 1/4/90, okay, 1/4/90, you will get 15%. You will get. Okay. Then motor cars, lorries, cars, taxis, business running them on hire. If you are in the business of hiring buses, lorries, cars, taxis and all, then you will get 45% deduction. Okay. This is actually between 23/8/19 to 31/3/20. So, motor cars, lorries, and in the business of running them on hire other than block 3. If it be between 23/8/19, 31/3/20 is 45%, and if not coming in that period, you will get 30% reduction. You will get. Okay. So this is how it is going. Now third one is actually ships and all. If you are taking, it is ocean going ships 20%, vessels ordinary operating in inland waters 20%, ships, all the ships you are getting 20%. Okay. So the now for intangible assets, okay, you are getting 25% deduction. Now put to use. What is put to use? When you say put to use, it can be active use or passive use. But if it is ready to use, it can be considered as put to use. Okay. Standby equipment, fire extinguisher, etc. can be capitalized if they are ready for use. Machinery spares which are part of tangible assets can be capitalized. Yeah, suppose actually you have an asset, okay, and it is actually your partly used for business, partly for your personal use. For example, you have a car. The car is 60% used for your business, 40% you use for your personal uses. Okay. In that case, how the depreciation is calculated? It should be, because the personal use depreciation will not cannot be given. Business use only depreciation is given. So the depreciation should be only 60% depreciation only you will get for a business. 40% you are using for personal use. Therefore, that you will not get it. But it should be proportionate depreciation only you will get. Okay. It is explained in section 38 that you will learn later. Okay. And this should be approved by the assessing officer. Assessing officer of the income tax should approve it. Okay. The way you are using it. There is this particular asset actually they should approve it. Now, depreciation, you will get full depreciation and 50% depreciation. There are two cases are there. 50% depreciation you will get if you are using the particular asset in the year it was purchased for less than 180 days. If you are using it 180 days or more, then you will get full depreciation. For getting full depreciation, you have to use it 180 days or more in the year in which the asset was purchased. Okay. Now, 180 days means actually from before 4th October. Okay. Before 4th October, it is 180 because it is 365 days. It is not a leap year. If it is a leap year, 366 days are there. Then 2025 is not a leap year. Therefore, we can consider 365 days only. Then, if you acquired the asset after 3rd October, from 4th October onwards, okay, 4th October means from 4th October to 31st March, it is 179 days. From 1st April to 3rd October, okay, it will be 180 days. Okay. So, 4th October to March 31. It is 179 days only. So, asset acquired during this period is less than 180 days. So, in such cases, in the year of purchase of the asset, if you use that asset or put to use mean always remember, use mean put to use. Okay, you are used in your business. Put to use for less than 180 days, depreciation shall be allowed only 50% of the allowable depreciation of the block. In subsequent years, you will get full depreciation. Next year, you will get full depreciation. But in the year of purchase, if you are if you put to use it for less than 179 180 days, then you will get only 50% of the depreciation. depreciation allowable is 50% of the normal depreciation if the following conditions are satisfied. What are the conditions? Where an asset is acquired during the previous year and it is put to use for less than 180 days during the year. These are the conditions to be satisfied. Now let us consider an example. Let us consider a general block, plant and machinery, in the previous year 24-25. So opening WDV for assets A and B as in 1/4/24 is 1 lakh rupees. And after that, this is the opening WDV. There are two assets are there, A and B. Then the WDV. WDV means actually the depreciation is deducted. Okay, depreciation deducted from the cost. Then all depreciation deducted, then you will get the WDV. So it is 1 lakh. Now you have purchased two assets, C and D. Okay, C you have purchased 5/4/24 and put to use that day itself. The cost of the set is 60,000, and D 10/6/24 you have purchased but put to use 15/10. That means after 3rd October. This is before 3rd October. That means full depreciation you will get. Okay, here actually even though you purchased on 10/6/24, you have put to use it on 15/10/24. That means you will get only half depreciation on this. Now, then you sold A. Okay, in A from A and B you sold A. Case 1 30,000. Second case 1,50,000. We'll consider two cases. Now calculate depreciation on 24-25. Okay, 24-25 you have to calculate the depreciation. What is the depreciation of 24-25? Now we know opening WDV is 1 lakh for A and B together. Both cases it is same. Case 1, case 2, both are the same. And purchases is total 60 and 40, 1 lakh. Both cases it is 1 lakh. So open WDV plus purchases you are doing. Now the total is coming 2 lakhs in both cases. Okay. Now second case sales. Sales first case it is 30,000. Case 1 is 30,000. So you have to add with the opening WDV the purchases and deduct the sales. So sales you have deducted, A you have sold, 30,000 you have deducted here. The balance is 1,70,000. So whatever this is the the WDV for depreciation to be you are considering. Then depreciation, two cases will come here. Depreciation. Okay, now put to use for less than 180 days, then put to use for greater than 180 days. Okay. When you are calculating depreciation, first you have to calculate the depreciation on the 50% cases. Mean whichever assets are used for less than 180 days. Okay. Once it is done, then that asset is to be deducted from the total WDV. Then for the balance only you have to calculate the full depreciation. This is how it will be calculated. Now for less than 180 days only one asset is there, that is 40,000 rupees. For the 40,000 rupees, 15% depreciation, general depreciation we are given. 15% is the rate. Of that, 40,000 into 15%, of that only 50% you will get because it is used less than 180 days. So if you calculate, okay, you are multiplying it, you are getting actually 3,000. Both cases it is 3,000 only because 40,000 50% we have calculated. Now in the second case actually your sales is 1,50,000. Therefore here actually the WDV is 50,000 for depreciation. Okay. Now less than once 180 days used assets, you are calculating the depreciation, it is coming 3000. Now, more than 180 days, how you will calculate? This is actually total 1,70,000 minus the asset used for less than 180 days, you have to deduct. For the balance amount, whatever we are getting, you are to calculate the full depreciation. So 15% you have to find out for that. Now you are getting 19,500. Okay, you are getting the total both together 22,500 depreciation you will get. Okay, this is the depreciation you are getting, and this depreciation to be deducted from the total, you will get 1,47,500. Second case, 3,000 you are deducted. Okay, second case is actually 19,500, but yeah, 19,500. Now here what is the case? Here 40,000 is to be deducted from the WDV, 50,000 minus 40,000. The balance you have to calculate 15%. This is only 10,000 is the balance amount. On that 15% full depreciation you calculate, you are getting 1,500. Total depreciation is 4,500. That means from 50,000 you are deducting 4,500, you are getting 45,500. So this is how the depreciation is calculated. Now one more depreciation is coming, actually additional depreciation, that we will learn later. That is also to be deducted, that you will learn later. Now that I have not mentioned here to avoid confusion. 50% depreciable asset to be added to the depreciation calculated on WDV received by deducting 50% depreciable assets from the relevant WDV and applying full depreciation to the balance. Understand? The same thing I told you. Okay, 50% depreciation asset to be added to the full depreciation. First, actually, you have to calculate the 50% depreciation. Then that is to be deducted from the relevant WDV for depreciation, and the balance amount you have to apply the full depreciation. That's how you are calculated. Okay. Here, let us consider another example. Here, 10% depreciation on furniture you can consider. Now open WDV, two assets A and B, two furniture A and B are there. The total, so we have purchased two more assets. Okay, the open WDV for two assets A and B is 50,000. We have purchased C and D. Okay, C is put to use for more than 180 days, for main and cost is 30,000, and D less than 180 days is 20,000. Now we sold A and B for 90,000. Now we have to calculate depreciation. Now as we know that open WDV we know 50,000. Now purchase to be added to that. C and D purchases to be added. This 30 plus 20, 50,000 added to that. Total 1 lakh we are getting. Now less sales. Sales is 90,000. Now we are getting 10,000. Though WDV relevant for depreciation is 10,000. Now want this 10,000 to get to calculate the depreciation. For calculating the depreciation, what you will do, we have to first actually calculate the depreciation for the 50% case, means less than 180 days use. So there is only one case is there, D. For D, less than 180 days, D, how we will calculate actually for this this relevant depreciation, 10,000 only we can calculate. So we cannot calculate take the 20,000 cost of the thing here, because actually WDV is only 10,000. So we cannot go for 20,000 also. So the WDV is less than the purchase value. Therefore, what we will do, we will take only 10,000 we will take, and 50% of the 10,000 mean only 10,000 is relevant here. 20,000 we cannot take. It is more than the WDV. Therefore, we will take only 10,000. 10,000 and 10%, 50% also we have take, because we used only for one or less than 180 days. So it is only 500 rupees. Though this is the depreciation, we can calculate only, it will be only 500 rupees, and this is the WDV, okay, for the particular year. So depreciation will be allowed to the owner even when the asset is actually utilized by lessee or licensee. Okay, and the asset may be used by lessee or maybe licensee. Okay, even then the depreciation will be allowed to the owner. Where letting out such assets are the business of the assessee or owner, he is entitled for depreciation under section 32. Okay, letting out assets are the business of the assessee or owner. Okay, and he is entitled for depreciation under section 32. The owner is entitled for depreciation. If letting out asset is not the business of the assessee or owner, still depreciation would be available as per section 57(2). Okay, income from other sources. House property let out to tenant for smooth running of the business. Okay, now house property income is there. It is let out to the tenant for smooth running of the business. If an assessee lets out a property to his employee for smooth running of his business, the rent received from employee will be PGBP income, and such property is eligible for depreciation under section 32. Now, normal case actually, even when letting out house is a business, then the income is considered under the head house property. But if it is essential for the smooth running of the business, then it can be considered as PGBP income. You are actually given on rent a house to your employee, and it is essential for the smooth running of the business. Then it is a PGBP income, and you can claim depreciation on that. Now, if you have rented out your property or building for some government agency, maybe some police station, bank, post office, tax office, railway staff quarters, etc., then the rent you are getting out of this will be a PGBP income, and you can charge depreciation on that. For example, you have a big factory complex. In that, actually, maybe in that factory, maybe 5,000 workers are working, or 2,000 workers are working, for example. So you need a bank inside that. So the bank is required, or a post office required. So you are letting out one building to the government agency for starting a bank, or for commencing bank, or a post office there. Then such kind of income what you are getting is a business income. So it can be considered as a PGBP income, and you can charge depreciation on the building also. Now, for example, another case you can consider, you bought some asset, okay, on 6th June 24, but you put to use it on 31/3/25. Only one day you used it, you put to use it. Even then, you can get here. Actually, you can get only 50% in the same year. But next year, if you are put to use on the next year, means actually after 1/4 or 1/4 itself, you are using it on maybe 20th/4/25. That means next year. So you will get full depreciation, even though you used it one day. Maybe the end of, okay, now the end of 25 mean you are using it, you purchased in the previous year 24/25, but you put to use the next previous year only one day used, maybe 31/3/26 you have used it. Okay, in that case you will get full depreciation on that. Even if you are using it for one day, you can claim full depreciation. In the same year of purchase, if you are using only one day, you will get, it is less than 180 days, you will get 50%. But next year, if you are using only one day, you are using it, then you can claim full depreciation. Put to use should be commercially put to use. It's not a trial run or something. It should be commercially put to use for the business. When a machine is kept ready after trial run and all, it is kept ready. Okay, you kept at standby or something. It's a spare machine, or in such cases also you can claim depreciation. You are entitled for depreciation. If put to use in a different previous year other than the previous year in which purchased, full rate of depreciation is claimable irrespective of the number of days used. First year of put to use used greater than or equal to 180 days, okay, mean 1st April to 3rd October, we can claim full rate of depreciation. Used for less than 180 days, from 4th October to March 31st, you can claim 50% depreciation in the year of purchase. Actually, in the year, both cases are applicable in the year of purchase. Okay. Second year, yeah. Second year, your first year actually, second year also you will get the full rate even if used for only 1 day in the previous year. Okay. And here less than 180 days you will get the full depreciation in the second year. Both cases you will get the full depreciation. The assessee must own the asset partly or wholly to be eligible for depreciation of the asset. Now, lesser can be considered as owner. Lesser is the owner. Okay. And there is a lessee and lesser is there. Okay. Lessee is giving the asset to the, lesser is giving the asset to the lessee. Then lessee is giving him the rent. Then depreciation is allowed to the lesser. Okay. In case of lease. Lease, we know there are two kinds of lease, operating lease and financial lease is there. Okay. And lesser is the owner. So he will get the depreciation. No depreciation will be allowed to an assessee who does not own the asset but only uses or hires the asset for business. Okay. So it's only he only use it. He just actually hires it. Then he will not get the depreciation. The owner will get the depreciation. In case of buildings, assessee must own the superstructure and should own the land or be a lessee of the land, and lease deed must provide that the building will belong to the lessor of the land upon the expiry of the period of lease. Okay. So if the conditions is like that, upon the expiry of the period of lease, it will be owned by the lessee. In such cases, he may be able to claim the depreciation. He is the deemed owner. Explanation. Where business or profession is carried out in leased building or other rights of occupancy, the capital expenditure incurred by the assessee for the purpose of business or profession or construction of any other structure, renovation, extension, improvement to the building, then depreciation is allowed to the deemed owner. If it's a long lease or something, okay, and maybe 30 years he has taken the building on lease or land on lease, then actually in that, for his business purpose, he has to do some expenses, capital expenses that he has to make. Then actually he can claim depreciation on that. He's a deemed owner. Then depreciation is allowed as a deemed owner. Thus, capital expenditure on a property by the lessee is allowed if done for his business or profession. And this is explained in AS 19 also. Depreciation will be allowed for assets wholly or partly in respect of assets used for business or profession. Okay. So, depreciation is allowed wholly or partly based upon the business use. Okay. I mean, if he is using 50% for the business, he will get 50% depreciation. Even if the assessee is not a registered owner, if he is a beneficial owner, he can claim depreciation. That means if he has the full control of the asset, he can claim depreciation. If it is joint ownership, depreciation is allowed on proportional basis, as we told. A and B together owns an asset, and based upon their share in the their investment in the asset, on the asset, actually they can claim depreciation. Now there are two cases, hire purchases. Then we talked about financial lease also. Financial lease, what will happen? No? Mean actually at the end the lessee can get the asset for a small amount, because actually that almost all the cost of the amount might have been taken by the lessor. Then at the end actually the asset will be handed over to him. In hire purchase, it's a different case. Hire purchase, what happens is the buyer is considered as a owner, and it will be handed over to him. The ownership will be given to him when the last installment is paid. So it is almost the same only. In case of property acquired on hire purchase, the buyer can claim depreciation even though he does not get legal title of the asset till he pays the last installment, as he gets substantial rights whenever contract is made. So the buyer can claim depreciation because actually he gets substantial rights whenever contract is made. Now, Section 53 of the Transfer of Property Act, possessor of an immovable property under Section 53A of Transfer of Property Act can claim depreciation, even though he is not registered owner of the property. Okay. Now you consider case 1, in which actually asset is there, depreciation 15%. Okay. Then it is business use and other use. 20% business use, 80% other use. So if he is using 20%, then 20% share of the depreciation he will get. Of the total 15% depreciation on the opening WDV, he can claim that. 80% somebody is using, some other business is using, he will get 80% share. For example, one asset is there, depreciation 15%, of 1 crore, it is used more than 179 days. Then owner 1 and owner 2, 50% share is there. Then owner 1 will get actually 50% of 15%, that is 7.5 lakhs. The other person will get 7.5 lakhs. This is how it is divided. In case of financial lease, depreciation is available to the lessor. Lessor is the owner, okay, not to the lessee. Lessee will be transferred, mean that the asset will be transferred to the lessee at the at the end of the lease period, maybe then maybe for a small amount, maybe that small amount is to be paid, then he can take the asset in his name. But actually the depreciation will be allowed to the lessor in that case. But in case of hire purchase, to the buyer it is allowed. In case of hire purchase, depreciation will be available to the hire purchaser, as he gets substantial ownership rights at the time when contract is made. Depreciation can be claimed only on put to use. From the date of put to use only depreciation can be claimed. So when purchased 10/10/24, then installed in 12, trial run 31/2, put to use in 23/5, okay, then depreciation can be claimed only then. Till that time depreciation cannot be claimed. This is the same thing what we told. Hire purchase is there, is an asset, then hire purchase vendor is there, then hire purchaser hirer is there. Okay, this is the vendor. Then hire purchaser hirer, he is considered as the owner. The depreciation allowed to him. Okay, multiple small payment of assets. Okay. Now we have covered some major part of the section. We have just still in section 32 only. Now there are many subclauses are there. So this is a very lengthy section. So a lot of things has to be learned in this. So it will take more classes for section 32 to be completed. Okay, and in next classes we will cover the balance of section 32 also. Maybe more than one class is required for this. Okay, so after that we will cover other section 38 also we will cover in this. Then we will go to section 35 and all. Okay.